Bill Ackman's top quotes for successful investing. Hey guys, today we're going to talk about Bill Ackman's top quotes for successful investing. Let's get right into it. I'm not emotional about investments. Investing is something where you have to be purely rational and not let emotion affect your decision making, just the facts. Some investors may become concerned about the prospects for their portfolios as a result of market volatility. Ackman believes that when making investment decisions, investors should ignore their emotions and instead use logic. When selecting a stock, you must use sound judgment. This is only possible if you conduct thorough research. Investing without emotion is easier said than done, but there are some key considerations that can keep an individual investor from chasing illusory gains or panic selling. Understanding your own risk tolerance, as well as the risks of your investments, can provide a solid foundation for making sound decisions. Active knowledge of the markets and the forces driving bullish and bearish trends is also essential. While active and emotional investing can be profitable at times, data shows that sticking to a well-defined investment strategy and staying the course during market volatility often results in the best long-term performance results. Investing is a business where you can look very silly for a long period of time before you are proven right. Investing in a stock and losing money in the short run should not worry long-term investors. If the company's financial outlook indicates that it remains a sound investment, how it performs in the coming weeks or months is largely irrelevant. It is also acceptable to go against the grain and be a lone ranger. It's natural for a long-term successor to want to stick together for safety. If you want to outperform the market, be confident in your research and take your own path. Stock investors can benefit from a variety of trading strategies. Investors with more experience and a larger capital pool may be able to ride the market waves and profit from short-term trading techniques. However, this may not work for those who are just starting out or cannot tolerate too much risk. Long-term stock holdings can help you ride market highs and lows, benefit from lower tax rates, and are less expensive. Experience is making mistakes and learning from them. Experience and knowledge can help you become a jack of all trades in the market. You should avoid making the same mistakes in the past and instead learn from them. Experience is a key quality that will help you dominate the market. Simply put, experience leads to success. So, how do we summon the courage to admit our errors? The solution is within ourselves. When it comes to money, ego and pride are always at play. Furthermore, with the advent of social media, chat groups, investment blogs, and internet forums, investing has become a more social activity. This phenomenon has an unintended consequence. Investors are constantly comparing themselves to others in a race to see who can produce the highest returns. Many people are unwilling to admit when they have made a mistake in the heat of competition. However, keep in mind that the true goal of investing is to achieve your own investment objectives. By putting your ego aside and actively seeking out errors, you can begin the process of becoming a better investor. You can learn about investing by reading books. Reading is an excellent way to learn new things. Ackman advises investors to conduct proper due diligence before making any investments in order to become a good investor. Reading books, annual reports, and other financial publications can help you learn new investing strategies and techniques. Begin by investing a small amount to gain hands-on experience with investing. If you're like many wise people, you're always on the lookout for good investing books. You might want to start with a book that covers the entire spectrum of investment options, from stocks and bonds to real estate, fine art, and cryptocurrencies. You may want to focus on a specific area of investing or gain an understanding of how experts approach investing and money. What book should you read next? If you only read one investment book, make it Benjamin Graham's The Intelligent Investor. Graham is known as the godfather of value investing for a reason. Benjamin Graham is widely regarded as the most influential investing figure of the 20th century, and The Intelligent Investor is widely regarded as the most influential investment book of all time. The Intelligent Investor is the Bible for value investors. Keep this one by your bedside. Short-term market and economic prognostication is largely a fool's errand. We invest according to a strategy that makes the need to rely on the short-term market or economic assessments largely irrelevant. Ackman explains how forecasting the future works. Some investors may find the economy and market performance appealing. This, however, may be counterproductive because it is impossible to accurately predict the economy's prospects. Instead, during a volatile economic period, focusing on analyzing company fundamentals may be a more efficient use of time. Fundamental analysis is a stock valuation tool used by analysts to determine whether a stock is overvalued or undervalued by the market. It takes into account a company's economic, market industry, and sector conditions, as well as its financial performance. Financial ratios derived from financial reports, government, industry, and economic reports, and other sources are used to evaluate a company. Because not every analyst uses the same tools or views stocks in the same way, you may determine that a stock is valued differently than another analyst. What matters is that the stock you analyze meets your value criteria, and that your analysis produces actionable information for you. That's all for today, and we'll be sure to catch you all in the next one.